Good morning, 99 family. I'm back with another video for you guys. Thank you all for watching. If you're new to the channel, on this channel we talk about personal finance, business finance, and professional development. If you're returning, I thank you for returning, and I'd like to ask you all again to not forget to give these videos a thumbs up and to comment down below and let me know if there's anything you have questions on or any other videos that you'd like to see. Today I wanted to kind of bring up something we talked about previously on the channel, and kind of shed light on a situation in the credit industry that I've noticed a lot, and that is these two cards here, these New Coast Direct and My Jewelers cards. They're not bad cards. They are legitimate cards. They're not at all a scam. However, I want you all to realize the reality behind using either one of these cards or cards like these. That goes for the Hutton Chase and all those other similar cards, Ox Publishing, all those things. Yes, they report. Yes, you can pay to put these trade lines on your credit. However, what people don't tell you about these cards is you're getting these cards and they are consumer finance companies, and they however, they do have high limits. So if you get, one My Jewelers or New Coast Direct or something like that, you're able to drop your utilization drastically. It does report the $5,000 trade line. It's great. But when you put too many consumer finance companies on your credit, especially when you're a new profile, it just makes you look riskier to the banks. They can recognize whenever they see an account on your credit, whether or not it's a store card, whether or not it has a Visa logo, MasterCard, an American Express, all of that goes into the algorithm, all that goes through the bank. And when they approve you or give you approvals, a lot of people have the misconception that you get higher limits just by having one of these cards. And that's a very big misconception. They tell you to put these cards on there because they are primaries. It will report, and either one of them will drop your utilization, and will give you a definite trade line that you know you're not going to waste an inquiry on. However, it's also good because we know, or should I say the industry knows, if you get recommended one of these two cards, the items that these companies sell are priced way above market value. Therefore, it can be assumed that you're not going to continue or continuously purchase from either one of these companies. So it will show somewhat of, good payment history and card management. And that's more of what these cards are for, just to add to your report, and start building your credit. I wouldn't necessarily recommend keeping these cards for longer than a year if you're going to get one of them. The annual fee is high. It is $100. And for that instance, you could also go and get, something like a Credit One card, because you're going to have a high annual fee and a high interest rate anyway. And at least if you did run into an emergency, you'd be able to actually use that card. So it's just something to think about. And I'm definitely not one to recommend a card like Credit One. However, if you're in that situation where you're down in the 3s, the 4s, low fives and you absolutely can't get approved for anything else, then yes, use something like this or a Credit One to bounce yourself back, get yourself out of that hole. Follow the other strategies in the other videos, get kickoff, get things like that to build yourself up. However, do not think just because you have, a New Coast Direct or a My Jewelers that's instantly going to trigger banks to give you $5,000-$10,000 credit cards. I don't want anyone to be misled. Thank you all for watching, and I'll see you in the next video.